Well, 2025 was a wild ride for digital currencies last year, with Bitcoin hitting record highs before a late slide in November, while the new Trump administration is pledging to make the US the crypto capital of the world. So what can we expect in 2026? Eleanor Terret is the host of the Crypto in America podcast, and she joins me now from New York. Eleanor, good to have you back on the program. Now, firstly, the industry is calling 2026 the year of institutional adoption. Can you tell us what that means?
That's right, Girish. First of all, Happy New Year, and thanks for having me back on the show. And you're right about that. So we are expecting increased participation this year from big banks, trading firms, asset managers, pension funds, and endowments. Basically, you name it, if they had one foot in the space in 2025, they're expected to have two this year in 2026. And the reason for that is that the Trump administration last year did a lot to roll back some of that regulatory red tape, making institutions much more comfortable coming into the space where they weren't so comfortable under prior administrations. And an example of this, just this week, Morgan Stanley, one of the largest and oldest banks on Wall Street, actually filed an application with the Securities and Exchange Commission to roll out their own exchange-traded fund mirroring Bitcoin, Solana, and Ethereum's price tracker. So that was a big shocker for a lot of people on Wall Street. You know, BlackRock was one of the first major Wall Street firms to do that back in 2024, but Morgan Stanley did it this week, and I think a lot of analysts were shocked by that. In fact, I follow a couple of Bloomberg analysts on Twitter, and they said, wow, we were not expecting Morgan Stanley, of all people, to do this. So definitely a lot more institutions feeling comfortable, feeling that regulatory red tape has been rolled back. So expect a lot of those institutions to be diving in and doing some of the same things that Morgan Stanley is doing this year, Girish.
Yeah, so beyond what you've just described being done by Morgan Stanley, what other sort of digital assets should we be on the lookout for this year?
Yeah, so, well, aside from Bitcoin, we obviously have Ethereum, we have Solana, there's XRP, some of these altcoins that we like to call them, alt meaning aside from Bitcoin, right? You know, a lot of these digital assets are now included in these exchange traded funds. A lot of these institutions are sort of crypto curious outside from Bitcoin. So keeping an eye on some of these altcoins would definitely be one to watch in 2026. When it comes to Bitcoin, though, we're looking at those prices. Obviously, I think last time I was on the show, Bitcoin now I think is just under 90,000. If we're looking at price charts, I'm looking at it here, about 89 to 90,000. It's only doing a little bit better than last time I was on the show, which I think was back in November. Yes. At that time, we were talking about, prices really taking a nosedive, because if you remember, the all-time high was in October. That was 126,000. And, we're getting some pretty, crazy price predictions for 2026. I've seen predictions ranging between 75,000 and upwards of like 250,000. So I think we're expecting, in the long term for Bitcoin's price predictions in 2026, the long-term trajectory to go up, but also some short-term volatility there. But also more increased participation from institutions means more liquidity there, and ultimately more price action. So from a price perspective, I think we're pretty bullish on those prices, at least what I'm seeing from analysts. But a definitely increased volatility. So next time I'm on the show, we hopefully won't be down again under that 80,000 mark, but you never know.
Yes. So when it comes to some of those major cryptocurrencies you mentioned, Bitcoin, Ethereum, Solana, what do you think might be some of the biggest factors to look out for in 2026? Should one look to invest?
Yeah, so Bitcoin usually, these days anyway, tends to move with the overall stock market. And I say that, and it sometimes can change, but it's acting more like a macro stock at the moment, or at least it tends to move with the macro trends, like the Fed, quantitative tightening. We saw last time, when I was on the show in November, we were waiting for that Fed potential rate cut, right? And we did get that rate cut in November. Stocks right now, they are buoyed. I think we saw this past week, U.S. equities were actually hitting record highs, despite some of those geopolitical tensions, with Venezuela, not actually having much of an impact on equities and not having much of an impact at all on Bitcoin either. So, when it comes to investing in crypto, some of those catalysts are really going to be less of sort of macro headwinds for this year. It's going to be much more based on sort of the regulatory tailwinds that we're going to see this year. Congress is just on the precipice of passing a landmark bill called the Clarity Act, which will provide a regulatory framework for cryptocurrency here in the United States. There's going to be some movement over in DC on Capitol Hill on that next week. Crypto traders are actually going to be watching that very closely, as well as institutions, because it will be sort of that catalyst, Girish, where institutions can kind of point to that and say, okay, there's real regulatory clarity, not just guidance by these federal agencies, but it's codified into law by Congress. We're going to feel much more comfortable when we can point to law and say, okay, there's law that we can point to and say, we can get into this stuff, and we're going to feel much more comfortable doing it. So that will be a for sure thing that traders are watching this year.
And is there more perhaps we might see from the self-described crypto president in the White House that's there at the moment? What moves do you expect from the Trump administration in this area beyond the legislation that we are talking about?
Yeah, so keep an eye on the midterms, Girish. That is going to be another key thing to watch. The midterms will be, probably the be-all, end-all. Once we pass March, we're going to be in full campaign season, right? The midterms are an event that happens, every 4 years, but every 2 years past the presidential election. It's going to be important because it could mess with what we call here the Republican trifecta, which means the Republicans right now hold the White House, the Senate, and the House of Representatives. And Polymarket, the prediction market, which I'm not sure if you guys have prediction markets over there in Australia, but they're huge over here in the United States. Polymarket and Kalshi are the two big ones, but they have the odds of the Democrats taking back the House of Representatives up at 77% right now. That could be a huge wrench in President Trump's plans for putting forward more crypto action, both legislatively, in the regulatory space, and also for his own crypto plans, right? We've seen him and his family launch quite a few crypto initiatives in the last, year or so. Just this week, the Trump family went a little bit deeper with their crypto plans. They actually applied for a bank charter with the federal government. They want to open a national bank to issue their own stablecoin. So, while we're gearing up for the midterms, they can do that. Hopefully this bill gets passed. In the meantime, there's questions over whether if this bill, doesn't get done by the time the midterms roll around, will it actually get done? What does that mean for broader crypto industry, for broader crypto legislation? That's a big question mark. So the midterms are a big if, Girish. We'll be watching that. We'll be watching the Trump family and their attitude towards crypto very closely.
Yeah, lots to watch out for in 2026. Eleanor Terret, really appreciate you giving your insights there from New York. Thank you so much.
Anytime. Thank you.